Jamaica is a highly prospective target area for different kinds of deposits in an island arc terrain.
As probably the most widespread, intensive, and in-depth exploration program that's ever been carried out in this island.
5 or 6 years worth of work into just 2.
No one else has ever done this before. There has been historic work on the island, trending back 150 years.
I think they're getting excited, as we are, so stay tuned.
Hello, my name is Andrew Thake from Minds and Money, and I'd like to welcome you to our 6th online event since the spring of last year. For our March online event, we have over 2,000 attendees signed up, and we hope that you find the event both informative, but also an opportunity to network, to learn, and to do business. Each day, the meeting planner will be open 24 hours a day. If you've not logged in, please do so. It's a great opportunity to set up meetings over the course of the event. We have over 100 mining companies and over 500 investors attending, so there are plenty of mining investment opportunities. The conference features high-level content, including fireside chats with the likes of Rick Rule of Sprott, Gord Stothard of Iron Gold, and Matt Fifield of Pacific Road Capital, keynote panel discussions on critical topics such as ESG, gold, silver, battery metals, mining supply chains, mergers and acquisitions and the Golden Triangle, mining pitch battles where mining projects pitch investors for their money, and our ever popular 5 at 5 chat shows. All of our recordings are on demand in case you missed the live sessions. Minds and Money would like to thank our sponsors for the event, who are Dundee Goodman, IBK Capital, RK Equity, Partners in Performance, Toronto Stock Exchange, and White & Case, as well as the 100 sponsoring mining companies taking part. Our first keynote speaker is Gianni Kovacevic, Chief Executive Officer of Copperbank and best-selling author of My Electrician Drives a Porsche. He's going to share with you his thoughts on the future of mining, the re-electrification of the world, and what it means for the mining industry. I hope that you enjoy the show. Over to you, Gianni.
Thank you, Andrew. And for those that perhaps have seen one of my talks before, or those that are seeing it for the first time, I hope to deliver some statistics, data points that are they're gonna have longevity, relevance, and it should relate whether you're an engineer, a geologist, a banker, a regular investor, institutional investor on this trend of the re-electrification of the world and the impact it's going to have. We're going to focus specifically on copper today. And of course, we're talking about any commodity, it's supply and demand. And we've seen how many cycles over the past decades. I've been through 4 myself. People that are older than me would have witnessed probably a couple more. And, to quote Sir John Templeton, the most dangerous words in investing are the 4 words of this time it's different. But can we say that if there is a changing of the guard, the way energy is going to be produced, delivered, and utilized by humanity, maybe that is a bit of a fair statement, because there's going to be winners and there's going to be losers. And as everyone should be well aware by now, I mean, copper is overwhelmingly going to take its stake of this winning column. But how much growth will there be in copper? How much growth can the mining industry deliver into various demand scenarios? And what's the price potential? So if we look at first on the demand side, where I used to have to debate with people or convince them or show them the functionality of an electric vehicle. I drove across America in 2016 in an electric vehicle to prove a point, engaging with typically people that were negative or did not believe that was a trend that was going to happen in their lifetime. They never tried these things. Of course, they had the commercial viability already at that time. And then there's also the renewable energy schemes. And this is really technology. And if you ask someone who is skeptical on a solar energy array or a wind power array, and this was probably more important a few years ago, and I would ask them, well, when did you do your research? Why are you so negative on solar power? Well, we did some studies, and they did it maybe in the year 2012. I mean, these things are doubling in efficiency, and the costs just continue to fall. But so if you studied this and came to a conclusion in the year 2012, you're just wrong. You know, already by 2016, there was a big change. And when we look at it now, there's a, you know, an undeniable transition that's taking place. And it depends where you live and depends which country, what's your natural endowment? Is it windy? Is it sunny? Or can you create a long-term importation of LNG to augment these renewables? And of course, batteries. So the demand for copper, when you put all this together, the commercial viability, all the major automotive manufacturers are indeed now pivoting towards electrification, and you will not recognize that industry by the year 2030. And what can the CAGR growth rate of copper be? Well, there's a few different scenarios. If you have hyperbolic Greta scenario, which is Bernstein Research came out with that, of course, that's not going to be delivered. That's a ridiculous scenario, but if that's what some people want, that's going to be very bullish for electric metals. And then you have epic fail, where we go back to just the copper particularly is relying only on the ascent of man, where you have about a 3% CAGR growth rate that's been pretty reliable for 50 or 60 years, even going back 100 years. And then there's the middle of the road scenario where you actually do have this accelerated adoption. And there's a little bit more confidence that can be delivered with that, because you have over $10 trillion of stimulus money. A lot of it is going to be put into green energy sort of schemes. And the number is probably about 6%. CAGR growth rate for copper, around 6%. That means the amount of copper that is going to be required on an annual demand basis, right now it's about 25 million tons, we end up going to 40 million tons somewhere in the next 15 years. Where is that copper going to come from? And why has the copper price been so strong amongst what should have been overwhelmingly negative economic factors, particularly through the middle and later part of 2020? Well, first of all, a lot of the mines shut down as well. So there was an offset to some of the lost demand. But when you look at the two examples that people can really relate to, who's the biggest fabricator of copper in the United States of America? It's Southwire. They produce or fabricate, I believe it's about 25% of all the copper that is fabricated in the United States. They make cable. They are a consumer of about 550,000 tons of copper per year. At least that's what it was when I visited their facilities about 70, 80 kilometers west of Atlanta, Georgia. And business is going to be very good for Southwire. It's going to be better than ever before, because as my friend John Gross would say, if rod mill is not coming into the back door, there's going to be no finished product going out the front door. The POs are being issued, and business is going to be better than it's ever been really in the history of anyone making cables, motors, transformers, anything that either creates, transfers, or utilizes electrical energy. So is Southwire going to consume more copper in the next few years? Absolutely. How much? We'll see. Probably 6% CAGR growth rate. But they're not the biggest consumer of copper in the world. That, of course, is the Chinese state-owned corporation called China State Grid. And China has put out their 14th five-year plan, and we're calling this the re-electrification of the world. But China already coined that phrase. And that happened when China State Grid, the former chairman Xu Yinbiao, achieved it. One of their long stated goals was to have electrical energy in every household in China. That was achieved about 2 years ago. And so what they started to do was this re-electrification of China, where they go into electrifying transportation, changing the way energy is delivered. And only today, it's about 57, 58% of Chinese primary electrical energy is derived from coal. It comes from hydro, nuclear power, and of course, the world's biggest installation of wind and solar. And now we have this massive pivot from coal to gas as these big pipelines, the Power of Siberia was commissioned last year, and all that's coming into China, augmented by LNG. So why am I talking about China State Grid? Well, they're the world's largest consumer of copper. Did you know that they consumed the last 5-6 years just a whisker below 3 million tons of copper? A 25 million ton market. That is a staggering statistic. But here's the headline. Part of China's 14th five-year plan, spending by China State Grid starting this year is going up by 55%. And that will be the same for the next 5 years in this re-electrification of China. if China State Grid was using a whisker below 3 million tons in the last 5-6 years, it is reasonable to anticipate that they're going to be consuming 4 million tons of copper. So you have all of these demand factors that I don't think miners have to lose much sleep that there will be demand for this product. Where will the copper come from? So now we come on to the supply part of the equation. And when you have $9,000 a ton copper, this is what we've seen this bifurcating here at $4.10. We have to look at what does that mean for the future of copper mining. So everyone should know that the head grades of global mining, which used to be 2%, fell to 1% and is precipitously fallen and is now running through the 15 largest copper companies. It's about 0.65% copper. And if you look at the reserve profile of the 15 largest copper producers, it falls below 0.5 and we end up somewhere in the 0.4 area. This is important because if you're a Chilean miner, and let's say you have a large open pit copper porphyry and you're mining 100,000 tons a day, which means in a 365-day year, you're mining 36 million tons of material, never mind the strip ratio. Now, if you're producing copper at 0.6%, that gives you a metal yield, which would be about 100 I have to do the math. It's about 260,000 tons a year, somewhere there. So when your grade falls to 0.4, if you want the same metal yield, you now have to mine 55 million tons a year. Most people don't appreciate just how difficult that is in 400-ton trucks. Now, I'm saying this because when we look at the money that was spent collectively by the industry, we can look at tens of billions of dollars that was spent during the China super cycle from 2005 to, let's say, 2020. We can glean certain conclusions from this data. It is without question, the future of copper mining is going to be below 0.4% copper equivalent grades. In fact, there's many projects where we have 0.3 or 0.4. This is important because what could an engineer do with this? So let us picture in the theater of your mind that copper stays at $4.10 a pound forever. That's $9,000 a ton. So that would be on a value basis. If it was 1% ore, it's worth $90 a ton. It's not. So the future, we know these 0.4% projects at this copper price is worth about $35, $36 a ton, and 0.3% copper would be worth $27 a ton. You don't recover it all. So 90% recovery, TCRC, and now you have to pay for building the project. So this has to be looked at. Where are these development projects where tens of billions of dollars has been spent collectively by juniors and majors, and we now have, let's call them, there's about 65 projects that could put out a collective metal yield based on their economic studies in excess of 3 million tons payable metal. So that would be a little bit north of, it's about 6 billion pounds, 6.5 billion pounds of copper. That's what's considered a large copper project. And that's the 65 projects I'm talking about. So when you look at all the stats, we start coming to some conclusions. One, the grade is below 0.4 and in many cases below 0.3. Can you build that project at $9,000 a ton copper? Well, you have to start asking some questions. Does your project have access to readily available water? Yes or no? Is your project at lower or higher elevation? Yes or no? Do you have a readily available workforce, or do you have to fly in thousands of people to build the mine and many hundreds of people to operate the mine for 25 or 30 years? Yes or no? Is your tailings the plan or the feasibility for the tailings, is it going to be relatively cost effective, or is it going to be complicated and technical? Yes or no? How are you going to be able to move the concentrate out? Is it going to be somewhere at high elevation in Peru where they already have issues moving these trucks in and out through communities? Do they want more of these trucks moving concentrate? Or is it going to be done with a railroad that is readily available? Yes or no? This is important because looking at these projects, and now I'm going to talk about the projects that are actually being built. There's 22 projects that are being built by the major mining companies. So the capital has been allocated. There's a bankable feasibility study. And we know that on average, the CapEx, capital intensity per ton of production is $20,000, which means for every 100,000 tons of metal yield that's projected in that feasibility study, it's on average $2 billion CapEx per 100,000 tons of metal. So the classic big porphyry that we just talked about, 100,000 tons a day at 0.5% copper would put out around 200,000 tons of metal. To build that, on average, is $4 billion. That's not me talking nonsense. This is me talking about the 21 feasibility studies of the projects being built right now. And they are being built in Russia, Kazakhstan, Mongolia, Robert Friedland's Kamoa project in Congo, Peru, and Chile. The future of copper mining will take place in these jurisdictions. High elevation, places that do not have historical copper mining culture, which means they don't have a readily available workforce that they can piggyback off of, or they're going to have to go to historical copper mining camps that have these attributes already fixed to them. So what price does the copper price, what price should the copper price be to incentivize the next wave of copper production? Because when you look at these 21 projects currently being built, that will be done between now and the year 2025, 2026. The metal yield is going to be about 3,300,000 tons once these are all completed. And is that enough to feed 6% CAGR growth rate? Well, of course not. It isn't. 25 million tons a year growing at 6%, that's not going to cut the mustard. Can we see an increase in scrap copper? Well, maybe 1 million tons. The single greatest year in the history of scrap copper delivered about 24% to the market, and that's after the price went ballistic during the China super cycle. And right now it's about 16, 17%. So yes, it's plausible that we could see a little bit more come up with recycled copper. Some people say that there's been a delay in innovation in copper mining between ore sorting, smarter trucks, and maybe a little bit better recovery and other little innovations where it's millimetrical progress, but still it ends up getting you maybe 8 or 10% efficiency at existing copper mines. So if primary copper, I said the market's 25 million tons, but primary copper production is 20 million tons. Can they get 8 or 10%, the miners, in the next 5, 6, 7, 8 years? That roughly balances us at 6%, but it's still going to be, in my opinion, an undersupplied market. But the incentive will be there. So how does a major mining company go to this next wave of projects, the next 30 or 40, where the grade is 0.3 or 0.4, and they don't have water, they are at high elevation, they don't have historical mining culture, so readily available workforce. Tailings is getting a little more complicated globally. And of course, the ESG that goes with permitting a project. Those feasibility studies, I'm talking about the projects from the year 2025 to 2030, the capital intensity per ton of production goes to $25,000 a ton. So for every 100,000 tons of metal yield, it's $2.5 billion of CapEx. That's before cost inflation, because copper prices are higher. People are going to want higher wages. The commodities cost more money than when these studies have been theorized. So I don't think it's unreasonable to see that next wave of projects from the years 2025 to 2030 require well in excess of $2.5 billion per every 100,000 tons of metal yield. And that tells me that it's not possible. At 9,000 a ton, or today's $4.10 a pound, where a ton of ore at 0.3% copper equivalent, not just copper, copper equivalent, is only worth $27 today. You simply cannot build that project. So it tells me that if the demand of copper is going to be good, and I don't lose any sleep about that, their businesses are going to be buying a lot of rod mill, and it's going to be going through the back of the factory because they're going to be pushing out finished material through the front door. That means they're going to have a lot of demand for copper. The price will go higher, and it will create a firm incentive basis where not just the miners have the confidence to convert a resource to a reserve, but bankers will say, you know what, we too believe that the copper price will stay stronger for longer, and we will finance some of this conversion. which leaves a huge opportunity for investors, because when you go down the food chain and we look at the value of what junior miners are trading for, you know, look at Copperbank's Copper Creek project. We are trading based on historical economic studies and historical resource estimates. Just to give you context, Copperbank doesn't consider these to be contemporary, but they were done to a 43-101 standard, so we can talk about them. That project's located, Copper Creek, in the Copper Corridor of Arizona, which has a readily available workforce. And it has a historical resource estimate that was done by IMC in 2012, which is 500 million tons measured indicated at 0.49% copper equivalent, 0.44% copper grades, and another 480 million tons of inferred at 0.34% copper. Well, it's better than the average in Arizona. So the grades are pretty good. And it's going to be, you know, you don't have to use your imagination to figure out what does it cost to build a 75,000 or 100,000 ton a day mill in that location. It's going to be a lot cheaper than at elevation or in places that don't have the copper culture like they do in the Copper Corridor. So that should be a pretty attractive project. And Copper Creek is trading at 1/2 of 1 penny per established pound in the ground. So that's an interesting metric, because if you look at the transaction value of the 30 or so projects from 2006 to 2012, it was between 3 cents and 10 cents per established pound in the ground. And there's a reason that major mining companies were paying that, and they will pay, in my opinion, at least that, and probably even more as we get later in the cycle, because when we aggregate those tens of billions of dollars of data that we can look at from economic studies and everything I just talked about, but we can also look at exploration. How much money does it cost to delineate a measured and indicated pound in the ground? Well, after they spent tens of billions of dollars, we can actually put averages on that. It now costs, on average, 4 cents to find a measured and indicated pound in the ground. So if a major's looking for a 10 billion pound copper porphyry, which would have about just a little bit less than 5 million tons of payable metal, these move the needle for the major, they already know it's going to cost $300 to $400 million in global exploration. So I believe they are going to go down the food chain. They're going to pick location, because it does matter. And I think Arizona is somewhere that's going to be on the top of the list. Australia, British Columbia, some of the historical copper mining areas. And then they're also going to have to look at elevation in places like in that Chile, Argentina border area and some of the other projects in Chile. And then Peru's going to have to go through its teething pain. So they're going to want another 1 million or 2 million tons of production. Peru grew very fast. And we have other areas like Ecuador, with some of the big discoveries that have been found there. They're digesting Mirador and Fruta del Norte, and will they want to build another 2 or 3 open pit or underground copper mines? That's to be determined. But the industry is going to make these moves. They're going to start. There will be M&A with some of the juniors, in my opinion, and location will matter. And if companies like Copperbank are trading at 1/2 penny per established pound in the ground, you know, I think it's plausible that we could see something reflective to the old transaction value or in excess of what it already takes. They know, the majors, to delineate a measured and indicated pound, which is now about 4 cents. So just to wrap it up, demand, let's not lose sleep over that. I think we're going to see somewhere between 5 and 7% CAGR growth rate through this next decade. And supply will be able to keep up if the price of copper stays consistently stronger for longer, which is going to be this ongoing decoupling from mainly oil. I think if you look at that 20-year chart, which I always show and showcase at all my presentations, it's starting to be very pronounced. And I think you'll start to see even the ESG crowd, where people that are in this divestment movement, where if $1 billion is allocated to a commodity fund, it won't be like it was 10 or 12 years ago, where most of that money actually went into oil and gas. You're going to see now funds that kind of money goes either predominantly into mining, electric metals, and you're going to see it also into just flat out electric metals. And copper will be the leader there, followed by nickel, aluminum, cobalt, lithium, and some of the other commodities, which I'm sure going to be talked about over the next few days. So Andrew, on my side, I think that pretty much sums up how I see supply and demand in copper. And hopefully we can catch up on these things every 6 months or a year or so. And that's it for me here in Zagreb, Croatia.